late Rakesh Jhunjhunwala, in his portfolio, Titan made up more than half of his portfolio,
Yes.
right? 50% of his portfolio, because he continued to keep having conviction.
Yeah.
A lot of people would have just exited after doubling the money.
Yeah.
And that's what I've realized. A lot of people, I was just talking to one of my school friends, and he had started investing, and his dad also had started investing about a year back. And the way they looked at investing in the stock market is not from a long-term compounding. They're like, okay, I put 1 lakh rupees, 1 lakh became 1.5 lakh rupees. Oh, let's just book this 50,000 rupees profit. This is the additional income that we've made, and let's just, spend it.
No, but I would not blame it. I'll tell you why. I am also tempted to sell now. I'm at 100% profit. You see the news that is coming out in the market. 100 problems are coming out from the last. You think it's easy to have conviction and sit. And it has gone down in the past. It can go down. So even Rakesh Jhunjhunwala, why I would strongly respect him for majority of the reason is because Titan, in its run from where he invested at 200 crore market cap to where it is now, it has gone down at least 40%, 4 to 5 times in that history.
Wow.
Now, if he had 1,000 crores, it has gone down to 40% down. Like, it has gone down that much, 500 crores ke aspas. Now, you have the guts to keep it. He had it. Normal investors would not have it. They would take the money and go.
Correct.
But he held on and on because he had a very weird vision. So that vision, I think it's very difficult for an average investor to get, honestly, right?
Right.
Like, today I can say, okay, HDFC Bank, this, that is all there. But 20 years ago, would you do it? Bajaj Finance was the fastest grower. Very few people actually had Bajaj Finance. 200, 3x, 4x, you will walk out. You will not sit for the 40x. So that is something that retail investors should learn. Very difficult. It is easy to say on a podcast, but very difficult to hold. And when you have Trump talking like this and problems and war and all, you will want to exit your portfolio.
It's a game of emotions and psychology.
A lot.
So if you had to give me a framework, Shashank, before we go deep dive more into some of your successful bets, that as an average investor, I am, let's say, investing 20,000-30,000 rupees per month, which includes a combination of mutual funds, gold, fixed deposit, a lot of these investments. Now, if I have to get actively investing in stocks like you, there is 2 ways, right? One is that, okay, I can't put all my money here because I'm still learning. So majority of my money, I'll still put in mutual funds, which are safe. And even if some of the years mutual funds give 0% return, it's fine because I'm still learning. Yeah. Right? So how much % of my investable corpus should I allocate towards active investing in stocks so that I can get returns like you, where you're making 20% returns even when the market is getting 0% returns? And how should I go about that journey where I start off small, whatever that percentage is, and then gradually increase it? So can you give me that blueprint?
I'll tell you. So a lot of people think 50-50 is the right answer. 50% mutual funds, 50% active investing. I think it should be 75% mutual funds and 25% active investing if you're absolute beginner.
When you're starting from year 1.
Yes, because even if you screw up that entire 25% portfolio, that 75% will recover it for you. Okay. That is the logic, right? Okay. The fund managers are doing a good job and you'll get your money. Start with 75-25. Get some profit, then let that 25% skew over to 50. Even today, I would still say 75-25 is the best for a beginner. Okay.
So if I'm investing 30,000 rupees a month, around 10,000 rupees can go into direct stock investing.
Yes. It's okay. Even if, because you will lose, man. It is very rare that you will win all the time in the stock market. You will lose. I have also lost multiple times. Even today, I have an SIP also going on. Even though I manage active, but my active is like 80%, I have 20% SIP. I might go wrong tomorrow.
Correct.
Right? Everyone goes wrong. The best of the best guys have gone wrong in the past. And I know my thesis might change. My style might change. I might give into fear, emotions, a lot of things. So I know at least my SIP basket might help me out there. So that's why I said 75-25 mutual funds to investing, it would be a good option right now.
Got it. Glad you made it till here. If this gave you even one idea to improve your finances, send it to a friend. Helping them might just make you the smartest person in their group chat. And don't miss the full episode on Finance with Sharan. There's a lot more where this came from.